Hey guys, Matt Durbin here with eXp Realty. Today I want to talk about the coronavirus effect. So we want to look at a few things. We want to look at what's going on right now in the Pittsburgh real estate market, what effect that's having on things around here, around the interest rate, stock market, things like that. We want to look at the things that we can control, and we want to look at maybe what's going on in the market, how to take advantage of this part of the market, and maybe a part of the market that you may want to avoid. So first, we want to kind of start with, what do we know right now? We know that in the Pittsburgh real estate market, inventory levels are still at extreme lows. There's not a lot of housing. We have buyers looking for days that cannot find something to suit their needs. So inventory levels are still low. Interest rates are still sub 3.5%. Obviously, with the stock market kind of bouncing up and down every other day here, interest rates are following as well, and I don't think that banks necessarily know what to do, so they're kind of holding right in that mid 3 range to lower 3 range, which is on a 30-year fixed rate. Obviously, we're going to continue to see stock market volatility. Every day you watch the news, there's something that's either going to scare you or it's going to cause you to not be too worried about what's going to happen in the future. So as we see things kind of progress, we're going to see things bounce around a lot. So we know that that's going to happen. And the other thing that we need to know is we cannot predict the future. None of us can. And so we really need to get back to kind of figuring out what is the goal, especially in real estate, right? If you're starting a family, you've got a baby on the way, for example. I have one on the way right now, so that kind of suits my needs. But if you need to find a house, you should still go and find a house. Real estate is a long-term investment. So when we say that, it's not, if you're thinking about making a purchase right now, that purchase shouldn't be thought about as a 1-year investment, a 2-year investment. That should be at least a 7-year kind of a 7-year outlook is what the average is. Most people stay in their home. So is what's going to happen in the stock market, what's going to happen with the economy, whether or not we hit a recession in the next year or two, going to affect where you're at and what your position is in 7 years? No, especially if you can get historically low interest rates on that purchase. It's almost free money right now when you look at it on a historic basis. So that's something that we definitely want to look at. But if we want to look at, what is the goal? Is the goal changed? If you need to sell, why do you want to sell? Is it because of a job change? Is it because you just want to take advantage of the market? If you're considering selling in the next 2 to 3 years, it's something that you need to look at right now, because, as we said at the beginning, you can't predict the future, but you may see the best market that we are going to have in the housing market for the next 10 years in this spring and summer market of 2020, especially with what's going on right now. I was around when the recession hit, 2007, 2008, and the real estate market took a huge dive at that point in time. And if you bought right at the end of that, you really took a hit. If you sold towards the end of that cycle, then you took great advantage of that market. Now, obviously, Pittsburgh didn't see much of that back in the day whenever the market went up and down and when we hit that recession. And we probably won't see that in this market either. A little bit later on, I'm going to talk about kind of what markets you may want to keep an eye on, may want to avoid. So if the goal still is, I need to sell my home in the next year, 2, 3 years, take advantage of that right now. There is low inventory. There is less competition. You still have buyers in the market at historically low interest rates, so they can afford more, which means you're going to probably get more for your home, and you're going to take advantage of the fact that there's low inventory, and you're going to get a higher price. So you're going to get a higher price, and then if you do go and decide to make a move-up purchase, you're still going to have a historically low interest rate in that sub 3 range. So you're going to sell high, you're going to buy low. It's almost free money right now. As we talked about before, if you're thinking about buying right now, interest rates are as low as they're going to get, right? They're going to bounce around. There's going to be a lot of volatility in the market over the next, who knows how long, month, 2 months. But, if you have the opportunity to purchase right now, you have the funds, you haven't been greatly affected by the stock market swing, I would still purchase if that's the goal. Is the goal is to get into a home and you're going to be there for 5 to 7 years. Take advantage of it right now. There are going to be people that are going to be listing their home, and you're never going to get this great of an interest rate. So if you're trying to time the market, yes, you may get a better deal in a year from now, but interest rates will probably be 5%. So that whatever deal you're going to make up on that purchase, you're going to lose in a increase in interest rates. And we know that they're going to go up. They just have to. Rates have got to go up in the future. There's nothing that we can say that's going to keep them at this kind of low interest rate pace. It's just not sustainable. So if you're thinking about that purchase, take advantage of the free money in the low interest rates right now. The other thing, if you are a homeowner right now and you know that you're going to be in your home for 6+ years, 7+ years, and you have an interest rate 30-year fixed over 4.5%, consider refinancing. At least price it out. Now rates are bouncing around a lot, but I know one of our clients and one of our team members recently, they've been in their home 5 years. Their interest rate was up in the high 4s. And they went and were able to refinance into a 15-year mortgage in the high 2s, cut, I think, 9 years off of their mortgage and keep their payment within $50 or $100. So if you can take advantage of that right now, you're going to be in your home for a while, look at a refinance, maybe look at dropping to a 15-year and take advantage of these rates. It's just something that you've got to look at. Now, I want to look at what are the market areas that we need to watch right now and keep an eye on. Anytime you see a market change, you want to look at what are the markets that are going to be affected first, and how are they going to kind of play out as we go down the line here and as a potential market shift comes into play. Obviously, we want to look at the luxury market. When the market crashed in 07, 08, it was generally with the luxury market first, the condo market, new construction, especially the luxury market. I think new construction, if you're still in that average price range where you're not on the top end of the market, you'll still be all right. But we want to keep an eye on those markets, because right now the luxury market, the condo market, and the vacation home market. So we're going to look at other state cities. Those are usually the indicators. We know that it's already slowing down in New York City and California and places like that. Those are usually the ones that will turn first. So we want to keep an eye on those. And if you're thinking about a luxury new construction build right now, I would maybe pause on that. I would maybe reconsider that and maybe think about what's going to happen here in the future, and look a little bit deeper, watch the market and see kind of what direction everything's heading. So as always, if we can help you out, if we can get you a market evaluation, if you're considering selling, we're at historic lows inventory level wise, and we could definitely use the inventory. We've got a lot of buyers out there. Contact us today. Obviously, you see the link. Here, callmattd.com. There's a place where you can schedule a call with us anytime. So if anything we can do, let us know. Thanks again.